Okay, hi there, guys. How you going, Helen? How you going, Gino? Hope you're good, guys. Hope we're having a good day so far. So far, so good. Market's a bit positive. I think the banks have picked up today, which is not bad. Oh, just give me 1 second. I'm a bit cold. I'll turn the heater on. Alrighty, we're back online. All right, guys, welcome to Trade Setup, the live stream. What date is it today? The 4th of October. Lauren, how are you, mate? Hope you had a good time, mate. Hope you had a good, relaxing. G'day, goldfish. Interesting name, that. All right, welcome to the live stream. What are we now? The 4th of October. So we kick along nicely. Market's up today. We'll take a look at the US. We'll take a look at what's happening over in, well, maybe have a quick look at Europe. Just look at the ASX at the moment. So, yeah, it's ticking away nicely. It's ticking away okay. For anyone that's new, you can just join us on Twitter, the top left-hand corner. I think they call that your handle, your Twitter handle, if I'm learning correctly. Top right is Facebook, and the bottom right, subscribe to us at YouTube. And then you'll see any of the videos, anything we do live will pop up straight away. And our general advice warning just about in the middle there. All right, let's get into it. Minimize that. Let me just change the, what am I doing here? Transition. That's charts there. I'll get rid of that. All right. So we'll get onto the ASX. We'll just start with the ASX. We're up 39.1 points. Let's get the chart up here. You can see the last couple of days has actually been quite positive. We were sort of buy short there for a little while. That trade didn't trigger. I think we had a short when it was going to break through here. Eventually it got, so normally on, if anyone doesn't know, anytime we do our alerts with trade setup, there's going to be an entry level and an exit level, like a stop loss level. But if the stop loss is basically triggered first, if that level is triggered first, we just cancel the order. We don't want to muck around too much. And that's purely because we're trading off lower highs or higher lows, higher lows for longs, lower highs for shorts. And if you're trading off, for example, well, in this place, lower high, we expect it to play it. And when it doesn't play it and it gets washed out, I'd rather just be out because the actual, the setup's not there anymore. And as it played out, it did kick lower, but it didn't get too far. So we've spoken about this a few times now. It's whether or not on the ASX, we had that bit of a sell off at the start of the month, a bit of a grind back up again, and we had that grind up. So when you get that sort of grindy price action, you do expect it to roll over. But at that stage, when we were looking at it, it's whether or not it was going to continue straight through 61 and head down to the weekly support around that 6,000 mark, or whether we're going to get held up there. As it's played out, it's looking like it's going to hold like that little minor. It's only ever so slightly higher low. We might get a bit of chop going forward, potentially held down by 62 and just sort of oscillating between 62, 61, jump around in there. But we'll see how it goes. At the moment, it's looking a bit more, well, I'm not so much biased down anymore. The way it's rejected those, that 61.25 level, you can see the last couple of days, today up 40. Yesterday was only up about 19 or 20 points. Yeah, we'll just keep an eye on that. I think to hold up, I'd expect it's going to have to do a bit more work. And you want to see it potentially grind down, hold another high low, but more significant high low, and then see if it can kick on from there. If not, we'll just keep an eye and see what happens, what plays out. Let me just mute that there. All right. What else we got? We'll just look at the Dow. That just kicks into new all-time highs. It's dragging along nicely. I think it closed in new all-time highs. When did it close? So we closed previous day 26,773, and we closed 26. Yeah, so about 50 or so points. It did trade a bit higher than that. I think intraday it was actually not looking too bad. We can't get intraday on that. It actually opened up quite strong and then spiked up on the open and then just drifted lower into the close. We had Europe that was quite positive. What's happening in Italy now? Italy have got obviously the debt issues. They did come out saying their budget deficit they wanted to widen it, which obviously the EU weren't happy with because that's just increasing your debt levels, which they don't want them to do. And there was a bit of argy-bargy back and forth, but I think they've come to terms with that. They've sort of done a backflip last night, saying no, we're not going to get our budget deficit kick out. We're going to be okay. We're going to take care of it, and then the markets sort of take that as a bit of a bonus. I think people jumped back into stocks over in Italy, getting back into sort of Italian stocks, and the bonds they were jumping back into bonds. So originally bonds were getting sold down, so that's an increase in yield. So that's the cost of financing. It had to increase quite a bit. That's when they got hammered, and then pretty much so probably some of those, I guess, short sellers into bonds were just closing them out. There's probably a few other people just sort of dipping their toe in the water, but I think there's still in emerging markets, and especially Italy, there's a few things they've got to sort out first. Am I coming through, guys? Can you hear me, guys? I think I'm okay. All right. I seem to be coming through, so just okay. That's all right then. Can you hear me there, Gino? Okay, all right. Gino's got a bit of a problem. He's been relaxing for too long. Been on holiday. Dulcet tones. Thank you very much, Alan. That's nice. All right, so the market's, I mean, this is just grinding higher. It's getting a bit overextended when it gets towards 27. Probably potential looking for a bit of a pullback, or drift lower, build a higher low and go again. Still looking at payrolls are out tomorrow night, and from the data last night, they might come out a bit more or a bit more positive than expected. So we'll just keep an eye on that, which is good and it's bad. I think the market, because it's stretched and valuations and everything, I think higher interest rates is going to crimp any sort of further upside in the US. But their actual economy is doing quite nice, so it's a bit different to what's happening globally. I mean, Europe is still they're still easing off in their tapering. Potentially they're growing okay, but they're not. Inflation's not out of hand at all over there. I think it's pretty neutral, so they've got that contained, and there's no reason to raise rates just yet. US is doing well. We're not raising rates at all anytime soon. Emerging markets still got those headwinds. You still got China. China have been on holiday this week, I think, for the week. Come back Monday. So not much happening just there why they are on holiday, but that's still hanging over our heads, the tariffs. So yeah, I think probably I can't see a lot of upside. I could see a bit of a grind in the US, but I can't see any too much downside either, considering their economy. Now, gone through that. Let's just look at some stocks. So I'll just go through what we got, and then feel free to put in anything you want to take a look at. We won't muck around too much today. There's not much change since Monday on the overall market. But yeah, just whatever code you want to take a look at. The only four positions we've got at the moment, we've got TER. Now it's looking to accelerate higher. It looks quite stretched. I mean, anyone's book that's looking a bit stretched. It's sort of that even dollar mark, which I've got my eye on. We've taken a partial on that. We're actually doing all right on the remaining. Yeah, not having too much of an issue with that. It's just whether we sit there and go, let's close it all out, or do we actually just hold off on that and just let it go? Because I mean, where we got our stop, I think it's still way down, 60. So it's still way down here. I don't want to tighten it up too much, and this is the bit of a problem. You can see how it's stretched. You got a couple of big green candles, and it's hovering around that 80 cent mark at the moment, or just below 80 cent, about 76 to 80. Uh, 80, 76 to 80, it's hovering up there, but it is stretched, and there's no real serious higher low to actually put your stop below, where it's, if you're going to get stopped out, you're going to be proven wrong. Otherwise, if you put it up towards 72, for instance, you can easily get stopped out at a pullback, but it's just a pullback before it tends and goes higher up to a buck. So this is one of those situations where you've just got to probably deal with a bit wider stop, and we've got lots to play with on this trade. A lot of room to move. I can't remember what we're up. Let me just check. Just 1 second there, guys. what's this called? TER. TER. So look, we've taken 13.5% on the first, which is good, except it doesn't look too good when we're up at 47% on the second half. So, either way, I think we're going to lock in. We're locking in at 60. I might have to raise that. I'm just going to keep an eye on that. I don't want to raise it actually. I'm just going to leave it. But another 14 or 15% on the second half. I mean, giving up quite a bit on that if we do get stopped out. That's the nature of the game, isn't it? Um, CDA is sort of choppy, just above that 320 zone. We locked in gains on that. Even if we get stopped out in the second half, we booked a profit, booked a partial. If we get stopped out, okay, so be it. It's still not looking too bad. You can see the pressure from the selling. It spiked up towards that 340. It's backed off, but it's holding above 320, and you can see that the buying pressure was up at overbought when we tended up towards that 340. Selling pressure's coming, but it's holding up. It's down sort of that oversold mark now, but it's still holding up at 320. Last time we were down at these levels, we're down at 280 or so. So the selling pressure, it is trying to give the market a nudge lower, but it's just, there is buyers soaking up that pressure. So we'll just keep an eye on that one. We've got it 310 if we do get spiked out. Okay, so be it. Wesfarmers short on that. Wasn't looking too bad when it pushed below 49. It's come down and retested that zone. That was back in July, end of July. Retested that support zone there. And it's just bounced back off that, but it's still holding. You can see holding lower highs. We've got our stop that's about 50-50. So if we get stopped out there, we're only a little bit shy. I think we lose 15 cents, which is next to nothing. So we'll see how that one continue lower. I want to see that dry through 49, but we'll see. Molly, MOY, 22.5. It's at 23. Yeah, it's not going too far, but it's the weekly chart. If you look at that weekly chart, the weekly charts we won, the one I'm really interested in. And if we can get up through the high at 24, that would be great. We can really spike up through 24. I think that weekly chart's looking good. We spoke about that on Monday. But that's about it for us. We've got potential short on Telstra. I might have to cancel that. It doesn't look short to me at the moment. You can see that's had this little spike up, pull back, another sort of run up, and that secondary push up here from the $3 mark is a lot more contained. But then when we had a couple of people were stepping back in above 310, stepping back in to soak up that selling pressure. I mean, it's not quite there yet, but it's looking set to lift. I mean, traditionally people just love Telstra. You love the dividends. As a stock itself, it's not looking great, and it hasn't been looking great for a long time now. It's been heading south, but just now, maybe it's getting a bit of buying support. We'll keep an eye on that one. Either way, we've got our stop would be 325. We've got the 324 today, so don't be surprised if it gets cancelled automatically anyway. If it does trigger 325, we'll just cancel the whole alert, call it a day. The other one's AGY, which want to go long, and it's going down. So the short we want to go down, it's going up. The long's going down. But anyway, so that's pretty much what we've got at the moment. Not much more happening. So any questions just on that, guys, before I All right. All right, let's get into it. What I'll do, we've got Lawrence just chucked in New Farm, FOD, and APX. Yeah, Hub. Now that you mentioned it, I've been watching that one. This is Hub. This is just what Lawrence mentioned. We might as well just get onto that straight away. Well, if I can get rid of that. You can see it's had a good run up, and after this type of move up, let's drag that in. This is on weekly. After this type of move up, that's really acceleration. When you get that sort of acceleration into the highs, into new highs, you're always going to find there's going to be profit taken, whether the people have bought it at 11, bought it at 12, especially when they've bought it late into that trend, and it starts to get a red candle for a week, and the next week is just dead. People don't really want to hold it, and you're getting further away from the MAs. The further you get away from the MAs, in my opinion, the low probability trade it becomes. So there's always people going to be searching for, or any excuse if you're sitting on gains, especially if you got in late. If you got in nice and early, if you got in right back at 6 or through 7 or so on, you've got a lot of fat in your trade to potentially give up a bit and look for just let it play out, see if that is the correction, and see if it's going to lift again, which at the moment it's starting to show some good signs. So if you got in nice and early, you can give it that time. But if you don't, if you got in a bit late to the trend, say above 12, then really don't want to give it any time. You'd rather book some gains on the first sign of weakness, and generally you'd be looking at your daily chart. Oops. In that respect, you probably would have been selling it through 14, say. I would have just got out, especially on that red day, just booked it, got out, or even below this low. That's your lower high. I know the anchor's sort of way down here. There's no real anchor on that daily chart. So your daily anchor is down to say about 10, or even what's that low there? 1039. So on this type of thing, I would be happy to book. If I bought some here, I would be happy to book at least a partial, potentially get out of all of it. If you see more weakness, potentially get out of the rest, and then just reassess it as you go. And potentially what you'd be looking at now is a re-entry, seeing if you can get it back when the market's running, starting to run higher, and see if you can get back on board then. Anyway, that's a bit of a getting sidetracked like I normally do. For me, let's just get my little, what does it do that for? No, another screen snapshot. Discard. So what we're seeing now is this contraction. So I would take it along the highs there, and what you can see is just here it popped up. So that's a bit of a heads up that we're potentially breaking up and out of contraction, and we're above there now. So we're above that level. Instead, it doesn't mean it's going to go up. It doesn't mean buy it now. It could just go sideways for the next 6 months. You don't know. It could just get caught between say 13.75 and around $12, oscillate for 12 above and below those two support and resistance zones. What I would ideally be looking for is that push up through. It's about 13.75. I'd like to see it pop up, and if it does, because this is a daily chart, isn't it? Then I'll probably be looking for that higher low to work from, and the higher low, because if I bought it through 13.75, my stop technically should be around 12.25. I'm not too happy with that kind of risk, so I would be more looking for that pop up through resistance, pull back to build your higher low. So we've got the resistance zone, pop up, maybe you get this sort of thing, and then look to buy so you can at least minimize your risk quite a bit more. And that way, if you've got that extra higher low, it's just that extra bit of confirmation that we're not the only one looking at that level. We're not the only one looking to buy, and see if you can get acceleration. So that, don't forget, we've had probably from the end of May, mid-May, till about now. So it's a good period of 1, 2, 3, 4.5 months. It's been contracting, so that's a decent effort. That, so the more time it spends contracting or consolidating or in pullback mode, in corrective action, the better that move could be up. Does that make sense here, guys? I think I made sense to myself. Yeah, that's hub. So we'll get on to the other ones there. NUH. NUH. Look, that's, you'd probably just go to that weekly chart to have a look at. It's a bit whippy, a bit spiky, isn't it? And it's below that 10-cent mark. I'm not a big fan when they're below 10. But if you're looking at it, I guess it started getting some volume, well, beginning of 2016, volume up here, had a big run up, had a pullback, so high low, run up. So technically on the weekly, this is your anchor level down around 4.2. And it's all this corrective action really only took it back down to the anchor level. And I would say at this stage, the anchor was down here. You've had this pretty much retest. It is a high low, but only ever so slightly. And then we've had this run up towards the highs again. So I'd be tending to look at that more as a double top than a lower high, and I'd be moving my anchor to, what is this level here? Low about 5.3. Let's draw that. So this is it. That's what we'll be looking for. So we're looking for my anchor here. So now what we're seeing is that a good powerful move up. Each time it's rallied, it's been quite strong. We've really done it in a few days. But when we're in pullback mode, you get it generally in there's two legs, one, maybe two here. Didn't start to rally off a higher low. That was sort of 1, 2. That was a major correction. that 2 legs before we got back down to and built another high low. We had a big spike up here. You'd probably call that your double top. So what we've done now, it looks like it's getting a bit better. So we've had this pullback off the high, pop up. So we've had our second leg now. What I'd be looking for is just a bit more. I'll be looking for searching for a high low to work from if I was going to buy this. So you can minimize your risk. Potentially, if it starts to run, if it doesn't in a couple of days, you'd probably just bail because the last few times it has run, if you're right, it doesn't look back; it just goes. So there's no real need to hold on for it too long. So really, it's starting to work in our favor. We're coming to a zone potentially around 7 or was that 8 that it's going to hold a high low, but you need this inside high low. So what we're looking at is a pop up. You got your sort of 2 legs down, and then we want to see this to work from. This type of high low here, and it's going to put the squeeze on the short sellers, or just drag in some buyers. They're going to chase it up. Potentially we get up to 13.5. If it goes through, great. If it doesn't, you've got a nice healthy gain on your hands. Does that make sense there? Org. What was next? FOD. Yeah, that'd be a bit tougher on the trade. And it's only because it's run quite hard. It got through 10. You see this playing above and below 10. Pushed up, built that high low at 8, started to lift again, and really accelerated from 10 up to close to 20, 19 cents. Bit of heat's coming out of that at the moment. I would ideally looking for, because I think the anchor's more down at that 8-cent level. So you're still quite away. I mean, if you bought it here and you had to really, you wouldn't be wanting, whoops, what have I done there? Oh, didn't even know I could do that. If you bought it in here, it's going to be quite aggressive. You'd want it to take out, say, a couple of days ago, that high at about 14.5 cents. You'd want to take that out, and you want to put it below 13, but there's no reason why it can't pop up, build another lower high, drag you in, and then drop back down again, and you're probably going to get stopped out on the way, because it's all in relation to this anchor, the daily anchor, which is still down at 8 cents. So I'd be a bit more wary on this one, and I want to see. There's not much time that's gone past. It's pretty much started off early September, where it took off, got to the highs by mid. So within a week, well, how many days was that? Say 1, 2, 3, 4, 5. Yeah, about a week's of trading. It just took off. So I'd want to see, for me, just a bit more time play out. So we've had this big run up, and then we sort of this pop here. Don't mind if it does a high, takes out this low at 11.5. But then I would just want to see it spend a bit of time contracting. And then you'll see from there, you'll see buyers are starting to edge in. They start edging at slightly higher levels, but it takes some time. And it just means the volatility's come out. And what you'd be looking for, that's when the market, at the moment, it's in contraction. And by contraction, we mean lower highs, potentially lower lows, or contraction can also be, this type of thing, when it contracts in on itself, higher lows, lower highs. Doesn't bother me too much, but you want to see a bit of that contraction. We're coming off the highs. You want to see it go from contraction to expansion. By expansion, you know that people are going to be chasing it up. You're on the right side of the market, and you'll know it when you're in it, if that makes sense. Because pretty much you have a trade that doesn't look back. You jump in, your timing's right, you minimize your risk, and away it goes. Does that make sense there, guys? Yeah, I think it's just got a bit more time to play out this one. I'd like to see it hold above 11.5, ideally. Even if it takes that 11.5, I don't mind. And then it pops up and then start to hold some high lows. So I want to work off some high lows. I want to see that price contract. And you can see, well, just change colors. By this, you want to see this type of thing contract in here. And then you know what is happening is the bulls and bears are coming to a point of agreement where if you can lift off a higher low and take out that lower high, then you know that people are going to be chasing it up. Does that make sense there, Laura? Any questions on that one? Give me a question that I can actually answer. Alrighty. This is looking good. The problem, I've got APX on the cards. My biggest issue, just bear with me a second. Just checking something. All right, good. So my biggest issue with APX is more the weekly. Let's remember what I was thinking. This weekly, I think I'm not saying that too much is going to happen. It has had a good strong trend up pretty much from 2017. It started. You got this leg up, holding higher lows. It's all quite clear. Most recent high low is just below $11. So if you're looking at that there, it's accelerated from 11 to 16. What's that? $5. It's about a 40%, if I'm right. What's that? 5 divided by 11. Yeah, 45% gainer on there. Now what we're seeing is just a bit of heat coming out of the market. So it's shown some really good signs, but I think again, and this is a bit of a technique too. If you see the candles on the downside when it's contracting, we know it's in a contractive mode. It's trying to hold that high low. It's trying to build that high low. Just see how many candles in previous after we get that spike higher. 1, 2, 3, 4, 5, 6. Say we've only gone pretty much 1, 2, 3, 4, 5. There might be another week of consolidation or to hold. Even down here, you got 1, 2, 3, 4, 5, 6, 7, maybe 8, where it started to lift on that on this week here is more lifting, but before that, yeah, it was getting a bit tentative. So maybe it's just got a bit of time to play out. It's looking good. On the daily, it's actually looking quite good. Yeah. Can anyone hear my clock chiming in the background? It's gone past, what is it, 1 o'clock? Right, does that make sense, just what we're saying here? I'm just going through APX. All right. Just going through what's been conversed. Does that make sense on that one? I just think I would like to see, and the way what I've got my eye on too. Whoops, if we were right on this trade and this was the area to build a high low, potentially you should have seen it on this day when it took out, I think it took it out by about a cent. High 14.44. What was that high? 43. So it took it out by a cent and closed below. Not a really positive sign. So if you bought that, there's times when I have a 2.2 cents above it. If I'm going to buy when it's rising, I want it to go 2 cents. A lot of the times it'll take it out a cent. And I think I was speaking to you about this, Gino, a bit of a washout. Now this is like potentially a washout. We've got this candle here. It took out the previous high by 1 cent. And this could easily from here, if it holds below, say 14.50, it could roll over, have a deeper correction, or at least potentially go down to test 13.25. You might just get it oscillate. It might hold up above, was it the recent low at around 13.80, say. It could just chop around there. But either way, I just want that time under my belt. But again, I mean, that daily, there's not much to say about the daily. It's very, very tempting. It's the weekly that's got me at the moment. But I mean, in saying all that, I could be left on the sidelines if this one does rally. So you've got this little pop up, pull back, another pop up, try to go again, couldn't, come back down, retest the low. So your line in the stand really is at 13.25 zone. If you're looking at it like that, yeah, I mean, we could still be building a lower high. Take that off. Your level at the moment, your anchor level was still around that, just below 15. So it's this resistance zone here. That's your anchor to the downtrend. That anchor level of the correction, what am I trying to say? So we've got this leg up. This is your corrective action. Corrective action got one move down, pop up. So that's at the stage, that's your starting point. Then once it comes back down and tests that low at 13.25, that becomes your anchor. So if you're looking to buy, ideally you'd want to see it sort of pop up through the anchor and then pull back, build your high low, and then go. And that's going to take quite a bit of time to play out. And I think if you get that price action, it's going to be a lot stronger and you're going to get that move, which we'll be looking for is this acceleration higher. All right. Hope that makes sense there. But yeah, I really do like that daily chart because we've got this inside higher level at 13.75, but it's the weekly that's keeping me offside on this. I'd rather see a pull back to the MAs. And don't forget, we're quite late into this trend up. Nothing to say it can't keep going. But ideally, if you want to buy, I'd be probably putting my stop below 13, but I'm not convinced that it can't stop me out first and then go. So more than likely, I'll probably just leave this one. I'll be on the sidelines for this. What else have we got there, guys? S32. Sorry if you can hear me drinking my coffee. I've got to get S32 from here. That does look nice hub, doesn't it? 80, here we go. TER, potentially pushing the new highs. 23, that's annoying. Oh, look at that. So that's your weekly. Was that news out today, or was it just daily share buyback? What time was that? Is that what triggered it, is it? Daily share buyback, 8:28, all right. It's given a lift by that, is it? The weekly, we were bullish on this down here somewhere, but just couldn't really. I probably dropped the ball a bit. Didn't get in. And in hindsight, it looks like I did drop the ball, doesn't it? So we send out alerts on South 32 as a buying opportunity. I know at the time, and this is what I guess just trying to realize at the time, the market wasn't too happy with China and US argy-bargy, a few extra bits and pieces. But when you're looking at it, the chart is saying a slightly different story. It's in corrective mode. So you don't want to wait for the confirmation of news. Generally, you're probably going to miss the boat when you're waiting for, more confirmation, or you're waiting for that news to turn positive. So I'm always looking for those opportunities where, okay, the structure looks great on the chart. Probably go down to the week. We're on the daily, aren't we? Down to the weekly to see that. You can see since 2016, it's pushed up, had a corrective action back to the MAs, bounced off the MAs again, up we go, bounced off the MAs, up we go. Had a decent enough pullback here, but it was really in context to that, is it 320 zone? You can see through here. And we started to lift again, but we got capped at the highs at $4. So once we got capped there, we even washed it out. Again, Gino, you can see that little washout on the weekly on the 14th of May or thereabouts. What day might that have been? 14th, and then again, it just touched it again on the 17th. So that's just took out the highs. Market's extended, you can see up here. So to buy it on that breakout, you know that it's probably going to get washed out and the market's going to contract. You don't know where to. If you're happy to buy on a breakout there and you really would want to hold your stop right down at 310, I think for me that's 25 or 30% risk on that. Would never take that kind of trade. But again, people do, and that's why you get washouts. They get stopped into a trade because it's South 32, and then it comes back down, pulls back on them, and then they're sort of stuck for a while at least. Now they're looking good. Anyway, what were we talking about? So on the weekly, we popped up, but then you can see this angle of descent here was, I like that. You can see compared to, once we come off $4 the first time, it pretty much dropped straight down to 320. Then we lifted again, pretty much that V-shaped recovery. You call it V-shape. We went up just as hard as we went down. But then what we did, we oscillated around that level. Like I said, I wouldn't buy on a breakout there, but I would take note of that breakout when it starts to grind lower, purely because two things. If you've got, I'm just trying to explain it. Just make sure I get it right. When we're looking at it, say, so the market's been pushing higher, all right, then you might have some sort of corrective action. It's the anchor, you're still above the anchor. So we've corrected, and then we start to go back up again. This could be, if it just washes out that level, I'll just draw it properly. We've got two scenarios, and I'll draw this up in red. So if we go and wash out that level, and we're still holding our anchor, so really, and then it starts to back and fill. Back and fill, we mean it just pulls back a bit. What you've got is your new anchor here. We've washed it out, but the market was potentially stretched at the time. Like the way I look at it, stochastics are in overbought territory. You've just washed out that level. I wouldn't buy it on the break. I'll be happy to leave it, and if I miss it, so be it. Because I think more often than not, when that sort of thing's set up, you're above your anchors, the trend is up, your stochastics. If you look at your oscillator, your RSI, you're sort of in that overbought territory. I'm more inclined to look at it and think we're going to get that washout of the highs. We're going to get a washout, and then I'd be more inclined to leave it. and risk missing the trade altogether than jumping in and risk getting stopped out on a big loss. Because from here, we're never going to know what's going to happen. Is that going to be a double top? And then all of a sudden we build a lower high and just go boom, straight back down, take out that anchor, take out this anchor, and you're stuck on a massive loss that you've got to put in the bottom drawer. And I don't trade that way. I'd always have a stop in there. So I think I'd be more inclined to probably get stopped out in that scenario than, have a massive stop. I don't like taking too much risk on any one trade anyway. So second scenario, so that's what I'd be looking for. If that's, there's a bit of a washout. And then what you'd be watching for is just if you get a bit of a grind. And that's what we got here. You can see that move down, pretty much that V shape. And this move down was, the angle of descent was a lot less steep. And when you get that sort of a grind, and there's a good chance that you're going to hold a higher low, which we did, only just probably about 10, 20 cents or so, and then you'd be looking for an area where it's going to lift, and you'd be looking for your higher low. Does that make sense though, guys? If we get a different scenario, so we pushed up, we've had that pullback. If you get a steeper pullback, yeah, I'll be a lot more aggressive on my exit, and I'll be more inclined to think that's going to be your double top than just a washout and it's just setting. So really, you can look at it two ways. If it washes out the market and pulls back, one, it's just clearing the way, or two, that's a heads up to get out of the stock. And it's really just assessing it from there. If you're actually in, you'd be wanting to probably minimize your risk a bit either way, because if you do get stopped out and you got scenario A here and it's going to go again, then just jump back in, away you go. But if you get stopped out, if you don't get stopped out and scenario B plays out, then you've got a bit of a problem. You've got a bigger loss to contend with. Does that make sense there? What I'm just trying to get at there? So it's always taking note of, what's happening, what action's happening here. Okay, I wouldn't buy here if I was looking to buy S32, and this is what we did like. We'll go back to the daily. I'll draw that up. All right, so we've got that's your level there, and that's, only probably narrowly, a bit of a washout there. Then we started getting more weakness come back into the market, press down, pop up, press down, and that grinded down. But you can see pretty much across those highs there. How would we draw that? It's a bit harder on some of these bigger stocks. You probably have to take it there, because at that stage, now I just want to show you something actually. Now while I'm talking about it, at that stage, I think we did have our resistance zone around here. But you can see, all right, let me just do that a bit better. So this is our resistance zone. So at this stage, when you're looking at it, you'd be debating about here, did it break out or didn't it? But either way, this is the beauty of waiting for a high low, waiting for more confirmation, because it's pulled back there and it's taken out that low. So that sort of negates the high low. That's not a high low. And the fact that it pops up here, you go, okay, now we're definitely breaking that, but do I have to reassess the whole chart? And that's where I would probably be more inclined to be looking at something like that. Because at that stage, we've taken out this low, we've got another new low. It's pretty much retested that zone back up at around that 365 to 370. So I would be putting my secondary, I would be more assessing my chart at that stage, like that. You've got this big blowout down, pop up, probably, give or take a few cents, it has broken it, but then what you've got there is that higher low. So this is about where we missed it. That makes sense. So you could have bought that through, say, 365. I mean, this is in hindsight. Your risk is below that high low. What we've done, we've contracted. The steepness of that contraction or that correction is handy. It's a bit of a heads up, like, oh, there's still a bit of buying. There's buyers soaking up this selling pressure. They're always soaking up, and you can see that by this, the angle of descent, as opposed to something that just comes up, goes straight back down again. Every time it gets sold off, it gets sold off hard. Now there's no buyers there. When you get that type of price action, there's no buyers willing to soak it up. They're just standing aside. So that's where I would always, piecing this puzzle together. We've got our anchor down, about 310. That's your longer term anchor. We've had a pop up. We've taken it out. So when we washed out that highs, you don't know what's going on. Then you see this descent, angle of descent. It's really not steep, if that's a word. Then you've got potentially this is going to be your zone for a major high low on the weekly, and then you're buying it onto a lift off a daily high low. So everything you've pieced all these together, you put together your trade, you bought it. So from there, it was really a matter of just sitting back and seeing what happens. And as it played out, it's got up to these highs, back up to sort of about that $4 zone, hesitated, and then gapped up today. And now we're getting a nice strong day today. So, I mean, if I had that from here, I'd probably be looking at booking some gains there. What would you be sitting on there? So what's that? Say you bought it at 365 up to 420, 55 cents, 65. You'd be sitting on about 15%. So on a stock like that, on a blue chip stock, that's quite handy. All right. So that's S32. Oh, sorry, mate. I didn't see you going, Laurent. Cheers, buddy. Any questions just on that, you guys? Is it a pattern? Yeah. So Helen was saying it's very similar to a pattern previously. I think you were mentioning these sorts of patterns, or all right. Anything else you want to take a quick look at, guys? Otherwise, I'll just keep rambling. Alrighty. Now, we're just taking a look at where we're at the moment. Going nicely. By the way, we had a trade balance was quite positive today, up a bit stronger than expected. So that's probably what's giving buoyed this market as well. Yeah, we've got too much to look at here. XJO. What are we looking at intraday on the XJO? I don't know if anyone looks at this, but 5 minute little pop up, big pullback. So if we can contract and hold above 61.75, and we get that contractive action off a lower high and higher lows, it starts to squeeze in on itself by 3 or 4 o'clock. Sorry, then it could actually look quite good. But yeah, we'll just keep an eye on it. All right. So I've just got sidetracked there. What have we got here? AGY, org. They come out of the woodwork. Sorry, I wasn't concentrated. I was looking at this. All right, what do we got here? Who's first? FMG. I did see someone talk about selling on that. Offer daily. The only thing I'd be doing is selling it. But the fact that it's been coming down for quite some time, I'd be hesitant. I'd be hesitant to sell into that only because of the weekly chart. Offer daily. Yeah, I wouldn't be stepping. Actually, I wonder if we can actually. I can't do stochastics, but I know not stochastics. What do you call them? Fibonacci. So I'm just wondering if that's about, give or take, you got your move up to here, probably support through about $1.50, move up to 7. So what's that? 550, half of 550. What's that? 220, 275. Oh, it's 275 plus $1.50. Mass is not that good. 425. So we've just gone below, and actually you can see that there. See that hold up around that 425 mark? That's your 50% Fibo, roughly. If I'm off, it could be a bit different. If you're taking from perfect low to perfect high up here, it could be slightly different, but I don't think we're going to be out that much. It's going to be give or take around 4 to 425. Now it's holding below that, so I'm not seeing any conviction, even if you've got the Fibo traders jumping in. Yeah, I think that's where I saw it, Helen. I actually got an email from them. I looked at the chart straight away and went, what? So that's why, long or short, I think they were talking long, weren't they? But anyway, so that weekly is not saying anything to me at the moment. I mean, if you were short that, you'd be having your stop just above that 404, probably at 405. You had to stop there, looking for it to continue on, take out the 350 zone. Now, if I wanted to be bullish on this, I think it's got a lot of work to do. It has to hold up above 350. We have to see a lot of contraction, and then potentially hold up. I wouldn't even say break four, because if it breaks four, it doesn't really mean too much. So you can see your sort of key zones holding, or your key anchor zones holding it down. You've got a key level up here at about 5. So I mean, this is all part of your daily move down. And at the moment, I don't really see the last solid leg down. You know, you could argue that that's your anchor as well, but that's such a small level. It's more, and when we talk about anchors, I'm always looking, if that's your move down, I'm always looking for this sort of thing. And then if it goes down again, then that's my new anchor. And it can go down a bit, but then you've got to get a little minor high low, so we can see you didn't really get it there, but it was a decent enough pop up. This move down, then you've got little high low, so that makes that your sort of nearest anchor. Didn't really get it. Well, okay, I would say 450 for argument's sake. Is your most recent anchor of this leg down? Well, I didn't even go the right color. So this is the leg down we're talking about, and that's on a weekly basis. So weekly, we're talking here, 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 most recent leg down. So you're trying to break it apart. Weekly is down. Your anchor, if you're going off a weekly chart, you wouldn't go anywhere near a buy just yet, because it's been held down around 5. If you're trying to break it down and get a bit more accuracy on your entries or your exits as well, you've got to break it down on the daily chart, and you need your anchor on your daily to be broken before you get some sort of confidence that we're starting to hold up. Now, this could easily hold up here. So what we've got at the moment, maybe just draw a different color. So we've got this push down here, pop up. We could easily do this and pop back up. We haven't really broken any significant level, any anchor or anything like that. And then we could roll over and do this same sort of scenario. Down, you know, little high, low in here, sucker in a few buys, and then boom, squeeze them back out and head lower. You never know what's going to happen. Just because it's a good solid stock, you don't know where people are willing to buy. If they're willing to build a position, you don't know where, you don't know when the selling is going to finish. You want, all you can ever do is just wait for someone else to do the heavy lifting for you, or do the hard work and show it to you, and then trade from it. So at the moment, that daily is not even showing me anything at all. So I'd be steering clear of that for a while. But just keep an eye on it. If IG long or short, yeah, long. So we'll see how IG go. Let's have a quick look at TAW. A bit of the same. That market's down. Hasn't really broken any significant level. But the fact is, this is more corrective action on the weekly. And you can see by corrective, I'm saying it's gone up here, touched just below 30, bit of correction there to below 20, 17.5, lifted again. This is mass, longer term correction. Once we got up to that 57, say 60 zone, up to this high, we've corrected back off that high on the weekly charts. It's just probably what I'd be really wary about is more, if this is my trend, you can see we're broken down there. So you don't know what's going to happen here. For me, to get anywhere near this, I wouldn't just buy it, drop it down to a daily and buy it on that breakthrough there, because it could easily, we could see any sort of action. We could just pop up here, build a major lower high. I mean, off a daily, you can get some profit, but you've got to be wary of exactly what you're seeing, exactly why you're trading, exactly why you're buying it. So off this weekly chart, the fact that we've broken down here, I thought it would have corrected back to, say, 32 and then started to lift off a higher low. We've pushed back down, we've come up at that 32 zone, then start to lift off a higher low and then buy into it. Instead, we've broken through it. So that's just changing the dynamics for me altogether. All right, that was tall. So I wouldn't even bother on the daily. Daily's heading south. It's got a lot of work to do before it perks my interest. What was next? Org. Origin. Yeah, again, you can see on a weekly basis, that looks like a short. On a weekly, this looks like it's building for a short sell. If you can, I actually went to short A2M today, intraday, and you can't short it. I wonder why. Too many bag holders on that one. So look at that. You've had this uptrend, and then you've gone through. So this is your anchor. For me, the way I assess it, that's my anchor level at around 850. We've broken. So this uptrend has been broken by a push through that, say it was around $9. with this move down here. That was broken. And we've broken the anchor in one foul swoop. So that's never a good sign. So at the moment, if you drop it down to a daily on that chart, and you can see the volume spiked up on this pullback. So the volume's lifted on this really, this drop here. Look at this action. 1, 2, the anchor's way up here. You're not getting anywhere significant level. It's potentially getting back up towards that 9, just as a bit of a, not really a gap fill, but that breakout zone potentially getting up here. So what I'd be looking for on the daily, if I'm looking for a short, I don't even need to do that, is we've had that move down, and what we're seeing now is this kind of pattern. I'll be looking for of course, a lower high. Lower high, you know where your risk is, and on the short side of, and what would be beautiful if we can draw this up properly is if we get it, the lower high, when this happens. So that way when you're breaking down off your lower high, you've got confirmation lower high, this trend line has been broken, and then you're starting to follow that weekly trend down. And I mean, who knows, where it could take us back down to 5, it could take us back down to the lows at 350. So for me, I'll be biased short on this one. I wouldn't go near, at the moment, the daily. The daily's extended up here too, so just keep an eye on it. Could be wrong, so maybe bring that up on Monday or Tuesday. Oh, sorry, Thursday. Ugly chart tool. Yep. What else did we get? Did we get through all of them? Oh, Gino. Sorry, mate. Just saw your last comment. FMG Tour org. AGY. All right. Might just see if we can get through AG. AGY. Actually, that's what I'm looking at here. And the reason I am looking at, I'll just draw that up. It's going to have to happen soon for me. If it doesn't, I'll give it a miss. So that you can see the weekly, it's had a pop up to just through 10, pull back, good acceleration up, right up to about 35 cents. Good, a decent pullback there, but really in Fibonacci terms, it's only probably about a 30-40% retracement, so that's quite handy. Showed some strength in there. If you bought it in there, great. Then you've got this big pop up to 447. But what we've done, and it's probably, I'll go back down to the daily, and if I can get it in there. So on the weekly, that's that anchor level. Where's my little drawing tool? Here we go. So that's what I'm looking at. That, oops, draw that up. That zone there was broken, but you can see, one, we washed out, we gapped down, washed it out, straight back up, finished above. This secondary time, we hesitated around the same support zone, took it out, then about a day later, boom, up we go. And that move up there, that gap up there, is probably on the back of news, is come through only some minor levels, but then what you've got back now, the markets, you can see how it's edging lower rather than a severe sell-off or a constant sell-off. We're edging lower back into that support, then we got boom, up we go again. And if you keep dropping it down, we've just taken out that sort of about 26 zone on the weekly. So for me, we're starting to hold a higher low. That is a daily, isn't it? Yep. So I'd probably be happy with, oh no, let's just draw that up quickly. So what I'm looking for now is that, okay, if this is the move, all right, we're broken up. I want to be confirmed that that's holding a high low. By confirmation, I'm getting to push up through 28. And if we push up through 28, it's confirmed that that's a high low off all this structure that we just mentioned. And potentially this is what could be a bit of a concern. We pop up, get stuck at 30 and head south again. But I'm fairly confident that it's taken, the way it's rocketed up here, it rocketed up there, and this type of price action until we got some news, boom, up she goes again. And if we can get that and it can break up, especially if we get anywhere near 34, then I think that trade's going to be on and you could be looking up towards 40, but we'll keep an eye on that one. If it does break down through, what's that low? 23.5, I have to reassess it. So we'll just hold it there anyway. What do we got? Might have to probably get over one more. STX. AGY, did I get through that? STX. Let's just get on to STX, and we might have to call it a day there, guys. STX, that's looking a bit nicer, and you can see that price action. If you've been listening to me for a while, rabbit on. You can see the market. Well, that might, no, it's nowhere near all of it. Okay, we had this bit of a rollover. Then we got down to about 6 cents, pop up, pull back, retest, pop up, lower high. So still more selling in. That's quite clear. Wash out that 6 cent level, and then up we go, pull back, boom, straight through these anchor levels at around, what's that high? At 8.2. And then again, we took out that level in one fell, pretty much that same day. Yeah, the same day at 9.6. So we took out 10, pull back. We've got this big run up. So it's cleared within a couple of days, weeks, sorry, within a couple of weeks, it's cleared out quite a few zones. So it's cleared the way. So this is perking the interest of any buyers. So really what we want to see is this can hold. If it can hold up above, 10 cents essentially, then I'd be interested. And what you can see is this little run up through 10, hit 16, straight back down, tested back through 10, got supported again, this little run up, and then the secondary move down was soaked up around 12 cents. So it's been soaking up around 12 cents, good part of August and September, a good couple of months now. So for me, if this can hold a higher low, it could be worth buying on a breakthrough 14.5 cents. The weekly is a bit more aggressive. Everything seems to be lining up on the daily chart. You can see higher lows are holding. And if we break up through there, we're going to put the squeeze on the short sellers, or we're going to start dragging in some more buyers. And then it's really just that weekly. If we get up through 14.5, then you'd be targeting a move up through 16. And if it just falls, if it stops pretty quickly, just get out. That would be my advice. But yeah, that daily's looking good. It's just knowing that the daily's good and the weekly's probably going to be, the weekly's probably got a bit more pressure on it. So just be wary of that when you're looking at it. Wary of what the weekly's doing as well. We'll just do our last one. We'll get through EDE just for the new fish. Sorry, I like that. Look, Eden Energy, that weekly, I mean, that weekly's horrible, really. It's just, you got to attribute this little bounce here. You could attribute it to one of two things. I mean, I wouldn't have bought this at all. Good volume that's come in. Good volume. It's probably, I'm guessing it's news related. Okay, first federal funded Eden Creek. Okay, so some back of some good news. But where it's come down to, I'll be keeping my eye on the weekly chart. And because you got so much fat or so much room on the upside, I'd be happy to give up some to be right. I'd rather give up some to be right than get in and be wrong. So what we've done, you can see this pop up, contraction, this big pop up. We've got this top of price action. Okay, it took out the anchor there. It's really just searching for a level. And at the moment, we could be stuck there. It doesn't mean we're going up because of the last couple of days. It just means that we've got that reaction. That reaction could be off, that 4 cent mark. So for me, I'd ideally I want to see that pop up, and that's pop up here through 10, maybe build some more contraction, and then get a high low to work from. If I get that, okay, so be it. Then that news is going to push into, it's going to drag in some more buyers, going to drag it for a lift up, and then you'd be looking, just looking to the levels, maybe 18, then up to 26, and then up to the highs of 34, if that's what plays out. But at the moment, I'll be referring to my weekly chart for the setup for a high low rather than going off any daily chart, because that daily price action is just lifted. So that's caught a lot of people off guard. They've chased it up. Now, those people who chase it up doesn't mean they can't get squeezed out with a pullback all the way back down to 4 cents. All right, so just keep an eye on it anyway. All right. What else we got? That's probably about it, guys. Might call it a day there. Okay, AQX, we'll look at that. Spooked by an insider. Yeah, never believe what people say. If someone's talking it up, they're always talking their book, if you ask me. And by talking their book, I mean they're loaded in and they want it to go up. So they're trying to get as many people involved to support that price if they run out of cash anyway. Yeah, not looking good, isn't it? Love you, Long. Thank you very much. And thank you, Helen. All right, guys, might call it a day. If I've missed anything, I'm sorry. Just bring it up again on Monday. We'll be back in on Monday and we'll go through it again. Thanks very much for joining us. Have a great weekend. Hopefully you'll be back on back in on Monday. Nice and relaxed after the weekend. I know we've got my mum's birthday, so I might be a little bit worse for wear if my brother comes over. I know what he's like. Anyway, thanks for joining me, guys. Have a great weekend, and we'll speak to you on Monday. Cheers. Enjoy yourself. Bye.